Well, so one of the questions that I asked one of my other guests that I'll ask you too, because you mentioned eventually there will be a point where the stock market becomes decimated. And what I want to know is, what does that look like to you? Is it a system where, just systemically everything will stay in place and whatever, gold will outperform and, equities will be revalued on a grandiose scale? Or is it an outcome where the system is at risk and it's get out of cash and get out of...
The latter, which you're referring to, is what happened in 2008. And it was a bit unusual because it was just a perverse combination of events brought to you by Alan Greenspan and Ben Bernanke, because Greenspan had led the charge to the abandonment of Glass-Steagall Act. So the big money center banks merged with the big brokerage firms, and they call themselves investment banks, which just means that they can get more levered up. And the Fed was supposed to supervise them. They took the oversight authority and they moved it to the Fed in the wake of that law change in 1998. So by 2008, you had these big quote unquote investment banks: Merrill gone, Lehman gone, Bear Stearns gone, and what they did was when the housing bubble was underway, I kept thinking, who are the suckers that are buying this crappy paper? Well, I could never figure out who owned them until the very end. It became clear, Jesus Christ, it's the same idiots that manufactured this stuff. The difference was, but they were allowed to get levered up. The banking system used to be able to be more levered up than a brokerage firm, because almost by definition, banks are taking less risk than brokerage firms, right? Got a hunch, bet a bunch. And so, but then that all went away after the Glass-Steagall was repealed, thanks to Greenspan, and so that's 2008 was a situation where you had the financial system levered to the eyeballs 30, 40 to 1 or more, because they had stuff off balance sheet in these special investment vehicles, SPIBs and SIBs, and then the paper started to go bad. Well, if you're levered 40 to 1, a 3% move wipes you out.
Right.
And when you got paper you got marked at par that might be worth 50, 60, 70 cents or 10, boom. So that happened. That is not going to happen again, I don't believe. The banks are not like that. They're being watched too closely. So I don't believe we'll have a systemic. They've transferred all the risk basically to the governments. The governments in corporate America. Corporate America's levered the snot out of its balance sheet, and you got all these guys buying back stock. And trust me, they're not buying back stock because they think it's cheap. They're trying to offset the dilution of all the options that they issue, right?
Sure, yep.
And now we're back to, we don't bother with GAAP accounting for people that weren't paying attention or weren't involved yet. After the dot-com bubble blew, or there was really a stock bubble, the epicenter of speculation was the internet wannabes. There was Sarbanes-Oxley that was passed that said that anyone, if you sign the financial statements, and if you're the top guys, you had to sign the financial statements. If anything was false in there, you were going to jail. And they never enforced it. And you were supposed to always use GAAP numbers. Well, we've moved away from it. The SEC is sound asleep. They never do anything proactive. And so now you've got these financial companies, you got these companies, making the numbers because they sold the right number of sandwiches, even they didn't know they didn't make any money, or this, that, there's all these alternative measures of success. And that only works in a mania where the money's free or worthless. And so the usual standards of, well, what's this business going to return to me vis-a-vis what the risk-free rate is? Well, the risk-free rate has been warped because the governments have said, the risk-free rate, which is 10-year government paper, is going to be somewhere between 0 and 1 and change. Well, but that's not where it would really be. So everything's warped, and it's all warped, and it's so powerful, the people, the institutions behind it, i.e. the central banks, that it's gone on a long time, and it's gone on so long, which is it's gone on long enough that the people that said, hey, this won't work well and badly get discredited, and people that said, gee, you said that 2 years ago, and look, they still went up, so screw you, you don't know what you're talking about. And so eventually everyone joins in, and then enough people join in, it gets unsustainable enough, prices get high enough, they can't hold them, and the thing falls of its own weight. That's what started to happen in Q4 last year. The market had been building the top since January. And, then the Fed backed off and people got excited. We've had this new run in the market, but we still don't have more free money. So the market's vulnerable because they're still doing QT. The numbers are going to be problematic in the next quarter. And part of why that's a lot of companies held up, especially in tech, where they said, well, we're going to, we'll be fine because there's going to be a second half rebound. Well, there's not going to be a second half rebound. Some of that was hung on the hopes that a deal between the U.S. and China would produce that. We're not going to have a deal, so it's not going to get produced. And if we did get a deal, it wouldn't get produced anyway. So there's going to be plenty of disappointment in the second half. And at some point, I believe the stock prices will start to get some momentum to the downside. And I believe they will. It'll be like an avalanche. It'll start and it'll just go. And then because it's all a joke. I mean, I got nothing against Clorox, but everybody knows what Clorox is, right? Does anybody not know what Clorox is? And nobody ever never heard of it. It's not exactly a business you think is going to be a wild, growth stock, right? Well, how does it sell at 25 times earnings? Well, it sells at 25 times earnings because that's a 2% earnings yield. So if you were getting all the earnings if you own the whole company, when the 10 years at one and change, it seems but on the other hand, is that sustainable? Is it always going to be like that? But that's what's happened. You can just go, if you look at them as businesses, but people don't do that anymore. And I'm not picking on Clorox. I got nothing against it. I just happened to look at it the other day and I thought, 25 times earnings for this? Anyway.
Well, that's the norm. I mean, 25 is the new 10.